Okay, welcome back to another episode. So today I'm going to be bringing in the continuous chart just because if you look at the contract month for June, there's no data over here to reference, right? So early on in my stages, I didn't know that we had to then reference the continuous chart. So I'm going to jump over to the continuous chart and I'm going to show you why. So we talked about the suspension block. We talked about how we want to see price trade up into that and then want to give out and go lower. We talked about the lows on the lower time frame yesterday, right? So if you see the chart from yesterday, it was this, right? I talked about this fair value gap. I said how we traded up in here, and I want to see how this will use. If we stay below it, then I will look to attack these equal lows here, right? We did that fair value gap, trade up into that, traded lower, traded out completely. Small sell side imbalance there, traded lower, and ran out the low here, right? This fair value gap is coupled with a swing high. So if you was trading a 1 hour setup, you can go there, stop there, look into target those equal lows. So that new low and then this low also had put a fib on that also. Let's get back into the continuous chart. So if we continue lower on the continuous chart and on the future contract month, then these would be some of the data point labels. Labels or levels that you want to see what price does once it gets there. So we still have this low to continue with. We have this wick, those levels to continue with, trading down into those now. This candle here, so the February 5th, 2025, I took the up wick, graded it, and then the down wick, I also graded it, but I just kept it back here. Okay. You can also use this inversion fair value gap and draw it out too, but I just used the most recent because these days come before this day in reference. So I used these reference points as the future downside objectives to want to see price trade down into. So we'll drop it down to hourly chart. This is what it looks like. 1 second. Boom. And then this is kind of where we are in current price action here. As you see, this low that we ran, look at the target on that daily chart here. This wick here is what we traded down into and then come back up into. I saw the guys on EYL where they said the market opened up lower. It was all the way down, trading down here, and then at the market open, it had came all the way back up and closed, and they were kind of like they're kind of ecstatic about it, right? But there's a couple of things that happened on this day. One, this was Monday, so there's a new gap, or new day, or new week opening gap that occurred on that day, right? They traded down into this wick, right? So this wick is a turning point. We traded down to 50% of that wick, and then we came back and started to close in that gap for that day. The candle was crazy. The volatility is crazy, but like nothing about that day was random, to me at least, right? New week opening gap here, traded down, and then we just came back and then closed in that gap and then wanted to attack some of the buy side liquidity up in here, right? So none about that was random to me, just because I was able to identify these levels on the chart, why it turned here, and then what it was looking like at 9:30, which was this candle right here. So this is 9 o'clock candle. We were already right here off the turn here, so I already assumed this gap can get filled, and then you can look to run out the buy side here, and then want to get back into that gap, and then see if it wants to get above that high there. It's not nothing to be like static about. It's just price. But no disrespect to those guys. All love to those guys. I follow those guys. That's all I know. But nothing about that was like crazy. But again here, so we're trading down inside of the old wick levels here. So we want to see how far do we get down in here. And then once we get down in here, you want to see does price begin to close below each gradient level, right? And then see how we do on that next candle. But these are the levels that I'm watching for downside objectives, and I will just continue to see if premium inefficiencies like this one continue, and this one continue to show the continuation of lower prices, and then that will lend to a bias of where price could possibly reach for if it was continue to respect premium arrays and trade through discount arrays. Till next time, talk soon.